This is Scott Whitwam with your morning real estate investor update. And today's top story, hurricane horror. North Carolina has been a very popular state for real estate investors. Now, many look at the horrific damage caused from Florida up through North Carolina and pray. We are dealing with many things right now in the U.S., inflation, economy, and an election. But none of it compares to the hurricane horror unleashed in Ashville, North Carolina, and the surrounding areas. Reports indicate that the damage is total, and it is being reported that hundreds have died across 6 states. The likelihood is that the number will grow to over 1,000 once everyone who is missing has been located. The damage is total and going to be astronomical. If you're able to help financially, I encourage you to do so. Word of caution, only donate through a trusted source to make sure your contribution gets to where it's needed. Today's mortgage rate update. Home refinance rates don't fare as well as purchase mortgage rates. According to Bankrate, tracking of mortgage rates this past week has showed that refinance rates rose 4 basis points over the last 7 days. There's an expectation that purchase rates will continue to drop over the next few weeks, and it looks like the Fed may have overpromised again on future rate cuts. Though I think we'll see at least one more before the election, with the recent job numbers, many insiders feel that the Fed may pull back on their aggressive start of rate cuts. Bankrate reported that the 30-year fixed-rate mortgage average stayed flat last week at 6.2%, and the 15-year rate remained in place at 5.44%. In today's wrap-up, investors beware of price hikes. If it's not enough that the last 3 years have given us 20+% price hikes on building materials and labors, now the East Coast has experienced a strike by port dock workers. It was settled, but there will be ramifications. And there is talk that the West Coast may strike as well. There may be a highly motivated reason, since it is being reported that the East Coast workers secured a 60% pay raise over 5 years. The Fed still has not obtained their inflation target rate. Bad job numbers again last month, and now port strikes. Get ready for higher prices. I don't blame the striking workers, but add them to everything else that has been mismanaged these last 3 years, and we'll be opening our pocketbooks once again. Expect delays on many building products here in the short term, along with higher prices for fuel and construction materials. As investors, we need to stay flexible and build it in as the newest bump in the road. Be sure to subscribe to the Morning Real Estate Investor Update and catch me on the weekly Whitwam Wealth Real Estate Podcast.